I am showing noon on the dot, so we will go ahead and get started. Good afternoon, everyone, and welcome to the American Family Insurance DreamBank, where we believe in the transformative power of dreams. My name is Andy Frisky. I am a senior sponsorships, partnerships, and events coordinator here at DreamBank. On behalf of our entire team, we are so thrilled to have you with us here today. As we get started, we always like to learn where people are tuning in from and encourage you to do so in the chat box if you are comfortable. I am located in the heart of Madison, Wisconsin, right on the East Washington corridor today. Another couple of housekeeping of items. This event is being recorded, and I will be sharing out that link after the event. It takes about roughly about a week or so after the event. I'll be sure to share that link. So if any of you happen to miss the event today or are looking for another person who might find a value of this event, you'll have that link handy as well. You'll also be receiving a post-event survey as well. Would very much appreciate it if you took a few moments just to go ahead and fill this out. So keep an eye out for that as well. But thank you so much for those of you, who are joining us here today. I'd love to take a couple of moments to explain who we are, what we do, and why we exist. So here at American Family Insurance, we believe that communities are stronger and the future is brighter when people are actively pursuing their dream. And that's why DreamBank was created. It's an inspirational and virtual destination that's dedicated to dreamers everywhere. Our offerings are designed to help you celebrate the dream journey, to overcome obstacles, and to stay motivated. I'll be dropping a couple links in the chat box today, just for some upcoming events and links, things of that nature. But you can head to our website that has a really good, concise list of all of our upcoming offerings that we have at DreamBank. But without further ado, I'd like to go ahead and kick it over to Victoria Thayer. So Victoria of Novii CPA will be chatting about meaningful KPIs, measuring what matters in your business. So without further ado, I will kick it over to Victoria. Victoria, go ahead and take it away.
Yes, hello everyone. Thank you so much, Andy, for the introduction. So I'm very excited to be joining you guys this lovely afternoon to talk about KPIs. What are they? I am seeing in the messaging that you guys are all over Phoenix, Beaver Dam, Texas. No, that's awesome. So very excited to be connecting with all of you. So we can get started, get to the fun of it. So we're going to be talking today about meaningful KPIs, measuring what really matters in your business. Just to give you an overview of what we're going to be learning during this session, we're going to be learning a little bit of since I'm a CPA, we're going to be talking a little bit about financials. Then we're going to be talking about why are KPIs important and what exactly are KPIs. Then we're going to be talking about different type of KPIs. And then how can you get started and start using them in your business? So that's what we're going to learn today. So a little bit about me. So my name is Victoria Thayer, and I am a CPA, founder of Novii CPA, where we work with small and medium-sized businesses, mostly in the manufacturing, life sciences, and also professional services. We are located right here in Madison, Wisconsin, and we're focused on providing clients with that client-centric service that they're looking for. And I have 10 years of experience helping business owners with accounting, taxes, as well as advisory services. So that's a little bit so you guys know that you can rely on our information. So, okay, so now let's get to the fun of it. Why do we care about KPIs? So statistically, they show that there is 30% more likelihood if you write your goals down. So we all go through January, right? And we all have all these lists of goals and that we want to achieve when I start going to the gym every day. And what happens when we don't start tracking all of that? So what happens if I don't keep tracking, okay, how many days I'm working out? How am I doing with my health app habits, right? Then it just starts disappearing. It just becomes this nice dream that you want to achieve. However, when you write your goals down and you track them, you're more likely to achieve them. And if you write them down and you have some sort of accountability, then you're 78% more likely to achieve those goals. So why don't we want to increase our odds? I think that makes complete sense, right, guys? So let's think for our businesses, it's the same thing as we are keeping track of our own health. It's the health of our business, and we need to figure out how can we make sure that we're getting closer to those goals that we want to achieve. And this is the perfect time of the year, guys, to be thinking about this because we're about to close 2024. We're thinking about 2025. Where do we want our business to be? So you're taking this session at the perfect time. So talking about where we want to be in the future. Before we start talking about KPIs, you need to assess your strategic goal for the next year. So as you sit down, reflect on how 2024 was, you also need to think about 2025 and what are your main goals for that year. So to give you some examples, I will want, for example, if I want to grow my business, I may want to increase revenue. If I want to add a second location, then that will be a strategic goal. If I want to retain employees, then that will be another one. So we want to set first a strategic goal that we want to achieve. And then we're going to find the right KPIs to be able to track it, to be able to know how close am I from achieving that goal. So remember, we evaluate how we have done the prior years. Then we set our goals for the next year. Do I want to increase my revenue like by 30% because I want to be able to open a second location? What does it mean if I want to increase like my team members, right? So like if I want to be able to hire another person, what does that mean from my financial KPIs, my operational KPIs? What does that mean and how can I keep track of it?
Hey, Victoria, this is Andy. I'm jumping in. I
Yes.
don't know. I think there's someone in the background that's speaking that's a little distracting. I'm not able
Oh,
to
yes.
hear your voice.
Yes. This is
Yep.
what
Yep.
it should be all set now.
Perfect.
I
Thank you.
apologize about that. Yes. Thank you very much for letting me know. So yeah, so we're talking about like the strategic goal. So we want to make sure that we set that goal before we start thinking about KPIs. So this is the perfect time of the year to do so. Now, before we talk specifically about what a KPI is, we want to talk a little bit about financials. So you all are probably very familiar with financials, like a balance sheet, a profit and loss. So I wanted to briefly touch on that because not all KPIs are going to be financial related. Some of them are, and that's why I wanted to kind of touch base on that. So what do I do when I get my financials? I use QuickBooks, for example, and I am getting my balance sheet, my profit and loss. What are key numbers from those statements that I can take with me to give me like a kind of like a background on how my business is doing? So we're talking about revenue, right? So what is my revenue? My revenue is all the money that I'm making from sales from all of my customers. It can be from products or services. All of my expenses. We're going to have expenses that can be operational. It can be other type of expenses, just overhead expenses. So that's going to cover like, okay, how much money is it costing me for me to produce this much revenue? Then we're going to have our profit or loss, and that is going to be related to what is left at the end of the day after like I take all my expenses, my profit. Then we're going to talk about like a little bit like in your financials, you probably can run a report called a cash flow. And what is the importance of a cash flow? The cash flow is very important and more for professional services business, because if you're billing your client, right, you may have a lot of revenue, but your cash flow is not coming in at the same time as your revenue is. So that's the importance of cash flow. The assets and liabilities. So we have like this balance sheet, right? Part of your like QuickBooks of your financials. What does it really mean? Sometimes these accounting words can be very daunting, but what it really means, like the asset is pretty much what your company owes. Yes. And then liabilities means what your company owes to others. So now that we have that kind of like that background, we want to dive into what are KPIs. Okay, so to say, I'm trying to rephrase you guys. So we talk about the strategic plan, which is what we want to set at the end of the year for next year. Okay, I want to achieve this big goal, which is I want to open my second location. That's my big goal. Now, my second one is like, okay, I'm gonna look at my financials. How did I did my prior year? So how was my 2024? How was my overall revenue, my overall expenses? How was my cash flow? So that those financials allow me to see the financial perspective of my business, right? And now we're gonna dive into what exactly is a KPI. So KPI, it stands for Key Performance Indicators. So we're gonna learn that what is the difference, and you may ask about a metric and a KPI. So a metric is everything. All KPIs are metrics, but not all metrics are KPIs. The key part is actually in the K that says key, is we want to select specifically what can tell us about the health of our business. What can tell us about the health of our business specifically? Just one second. So one of the parts that is the key portion. So we want to ensure that that we focus on what is really making the more sense for our business. So in that case, well, before you answer that one though, guys, how another way that I find very easily to understand KPIs is that everything is a metric, and the KPIs are like pretty much the roadmap and the kind of compass that tells me if I'm going the right direction. It really gives me the vitals on the health of my business. So if I think about it, everything like clicks in my website can be a metric. How many retention of employees do I have? Everything is a metric, but not everything is going to be a KPI. KPIs, we want to keep 3 per each different type of KPI, and we want to track them. We cannot, nowadays we're so full of data. We can see data from our CRM, we can see our data from our QuickBooks Online, we can see our data from so many different places, from reviews that are leaving us in our businesses, from like Google reviews. So we really need to focus on what is going to help me achieve my goal, which in my case, the example that I was giving you, is to open my second location, right? So, okay, what is really going to be an indicator that I'm getting closer to that one goal? So now that we know what KPIs are, right? So we're talking about is a type of metric that's going to tell me the health of my business. Would you mind sharing and using this QR code to answer to this question about, do you currently use KPIs to assess your business? I'm just curious about, so some people in here saying yes. And you can also answer with the QR code. We have someone also tracking that, but yeah, you can also just put it in here in the chat too, because I'm reading you guys as you. So yeah, so I'm happy that Printel Francis says yes, I'm using, Sam says yes. Okay, perfect. So I'm very glad that people are using it already. They are essential to be able to be successful in the business. Then we also get the result from here, and then actually from the QR code, we're receiving that majority of people said no, they're not using it, but I'm glad that people from the chat said yes. Again, very important. I almost think that it's getting into a car and asking the car to just take you somewhere without actually entering a direction in the like in the GPS. So you need to enter a direction into the GPS in order to be able to do that. So now that we're learning that, so what makes an effective KPI? I can set a couple of KPIs, but what really makes it effective? That's going to be the fact that it is specific, that is going to be measurable, that is going to be achievable, relevant, and time bound. So we all heard about the SMART goals, right? So a specific, I cannot say, oh, I just want to open a second location. Well, what does that really mean for my KPI? A specific could be, okay, in order for me to afford a second location, what is going to be my operational cost? Well, I need to be able to pay for rent. I need to be able to pay for all these extra expenses. So then I know specifically what is my specific goal. Well, I know I need a security deposit, and I need these operating expenses to be able to cover, let's say, 6 months of that second location until I can maintain it on its own. So my specific goal will be, okay, I need X amount of money in my bank account in order to be able to afford all those expenses, those startup expenses for my second location. Now they need to be measurable. Okay, I cannot say like, oh, I want enough money. You need to set exactly the amount of money you're gonna need for that second location. Achievable, well, if I'm starting out, I am not gonna assume that I'm gonna go and rent like the whole American family building. I am going to assume I'm gonna get another second location similar on like a price range that it's attainable for my growth. Relevant, again, we cannot track everything. We can get lost tracking so many things. So it is very important that we pick those metrics that are relevant. So in my case, if that's my main goal, I want to be able to track my client retention. I want to be able to track my, for example, like my cost of acquisition of new clients. So those are the kind of things that I want to make sure that I am tracking. So we also have time bound. So we need to set specific times. In the same way that we have like health checkups with our doctors, we also need to make sure that we're checking this in a weekly, monthly, and quarterly basis, checking how are we doing related with the KPIs that we have set. So now that we know that, I want to talk to you about different type of KPIs. So we have financial, customer, and operational. Now, every single type of these KPIs are going to vary for your business. So we talk about if you are in the professional services, you're going to care more for client retention. You're going to care more for customer acquisition costs, right? If you are part of a retail business, you're going to care more about like inventory turnover. So financial KPIs, what are those? So that is coming directly from your accounting. So whatever accounting you may be using, Sage, QuickBooks Online, Excel, Wave, any of those are going to be able to give you your financial information. So that's going to tell you about your net profits, your losses, your cash flow. Then we also have your customer KPI. So this is going to come most likely from something like HubSpot, your CRM. So how many clients are reaching out to your website? What is the conversion of those clients? That's going to be my customer KPIs. How are my ratings, for example, in like my Google business review site? Operational KPIs, that is going to be how efficient I am with my business operations. So in the case of a professional service, I may be tracking, for example, how long an engagement takes me. How can I increase my, like, for example, like if I'm taking an engagement that may take 3 hours, how can I lower that? How can I make my process more efficient so that next year, one of my KPIs, if I'm trying to reduce costs, it will be to reduce it to like 2.5 hours or to 2 hours from 3. So these are different sets of KPIs that we can set, and the recommended amount is 3 per each sector. So we don't want to like just bombard ourselves with a lot of data to track, because if we have too much, then we cannot really focus on the ones that are really going to drive us towards our goals. So now that we're talking about all the different KPIs, and we're talking as well about all the different data that we can gather, I would love for you to share in the chat or using the QR code. What is the biggest challenges right now that you are having tracking your business metrics? Like, what would you say that are some of those? I can tell you, for example, that what I have heard about tracking metrics has been, yes, system implementation. So like a lot of softwares are very expensive to implement. Like let's think about things like Salesforce, very expensive. But we can also use things that we have at our access. So something very easy to use is like a Google site. Like that, we can see the clicks, we see what keywords are helping us to bring us up to our potential customers. There is your financial perspective, that QBO Wave is also an amazing resource to be able to track them. And the majority of them, to be completely transparent with you, are going to be focused on one area. So we have things like HubSpot, for example, for CRMs, for more the customer retention, for more customer KPIs. Then we have QBO for the more financial KPIs. So we are going to have to merge all those two and grab the 3 KPIs that I want to focus on this one, the 3 KPIs that I want to focus on this one, and then track them. Finding a simple for all CRM, yes, absolutely. And that will be in, once we have them all together, then something like Excel can help us to just create charts and be able to see how close are we. And again, like there's a lot of softwares, but starting easy and simple will get you a long, long way. I'm worried for coming from not having, from not doing it before. So like, yes, understanding which metrics to track, yes. And again, we sometimes get so overwhelmed with what metrics to track. Again, we're bombarded with data. So we're going to touch a couple of them that we recommend. So these are mostly targeted for what we see the most is professional services. So here, like these are like the formula. So this is kind of like the math portion of the session. Don't worry, we're not going to quiz you like memorizing this, but now you have them, and we're going to have customer acquisition costs. So for professional services, most likely, I mean, you're still gonna see it in a retail as well. What we want to track is like, okay, I'm doing all this marketing, I'm spending all this money in these sales, but what does that really mean for my new customers? For example, like to give you an example, if someone is providing a service and is doing an ad, and it's like, okay, I did this ad, I did this podcast, I did all these things. I want to be able to capture in a month, at least in a monthly basis. After I'm done with my financials, I'm like, okay, I'm gonna grab this number from my QuickBooks or my accounting software, right? I can very easily track that total sales. Then I'm gonna go, and if you're using already a CRM, or if you're not using a CRM, then manually counting all your new customers acquired during that month. If it is a professional services, it may be easy to do. If it is a retail business, then it's going to be harder to do. Maybe hopefully with a POS, if you have a POS and tracking it through that. And then that will be able to give us the customer acquisition cost of our clients. And why is this important? Well, to be able to assess, okay, my goal is to grow and have my second location. I need to be able to acquire enough customers to be able to afford that second location. So if this number is too high, which is going to mean that I am spending way too much money in sales, then that's teaching me and telling me that like, hey, I need to change something about my current strategy. Well, I have doing all of my ads in the magazines. Well, that is not a strategy that is working because I can tell per my KPI. Then what is going to take me closer is like, okay, what other strategy can I do? And let's say that I decide to go to trade shows instead of doing ads in magazines. So the customer acquisition cost is going to be a very important KPI to measure, and you can hopefully easily get the number of new customer acquired in that period of time. How will I personally do this every single month? It is very important to track. If you can do it even like sooner than a month, even better. But it is easier if you do it every month and you're closing all of your financials every single month, because you're going to be able to find the sales and market expenses pretty easily. Then we also have the customer lifetime value. So that also tells me a lot for a business, mostly if you're in the professional service business, because I don't want to spend all of my resources and my money on getting new clients if I'm losing them as quickly as I'm getting new clients. So how can I open my second location if I cannot retain the ones that are going to help me support and keep my first location? So in this case, you're going to see here the formula that you can use for customer lifetime value. It's going to be, okay, what is that? It's going to be my revenue divided by my number of purchases, average purchase frequency, so like how often are you providing the services for the client, and average customer lifetime. So, okay, my clients are usually with me for like a year. They usually come by once a month if I'm selling some sort of service. Let's say that I give like a massages. They come once a month for their massage. The revenue, the total of the time that like I will be giving them, and then number of purchases. Oh, okay, they came like 3 times. So that will allow me to see how much money I am getting from every single client that I am acquiring within the lifetime of that client. And again, like the lifetime is not going to be the same thing as a lifetime of like the actual lifetime of a human being, but it's like I know that approximately like a client will stick around for like 3 years, a year. So that's what we're trying to figure out during that period of time. What is the revenue that I will be able to bring on from each of those clients? And then again, we have churn. Again, like we want to minimize it. How many customers I am losing? We need to track it too. Again, this tells me part of the story. It doesn't say it all, right? Because let's assume that we were tracking all of this, the churn rate, when I was in COVID. This would be very bad, right? It would look like, oh my God, you lost all the clients. Well, not really. So remember that the KPIs is telling me a health signal. So it's almost like me going to the doctor and I get in the scale to measure my weight. That tells me a data point that's most likely going to combine with other KPIs. It's going to tell me my overall health, but on its own, it's not telling me the full story. Because the full story could be like, well, I am upping my weight, but that may be because I get a lot of muscle or I gain a lot of fat. But if we look at the combination of different KPIs, I will be able to tell the whole story of the business. This number of purchases. Oh, here, this number of purchases, every purchase. Yes, so this is saying, for example, like, okay, how many purchases of every purchase? Yes. So for example, let's say I will give you an example in here to answer that question. So I'm going to say that my overall revenue was $1,000 and this person came 10 times. And then I'm going to multiply by the average purchase frequency. So revenue is the total revenue, which again is coming from my like P&L, my profit and loss from my QuickBooks. Number of purchases in total. Absolutely. Every single purchase, which you can get from your POS. If you have a POS, if you're a retailer, you can get it from the POS. If you are a professional service, you can get your total number of invoices that you sent. And then you can get the purchase frequency. Okay, for example, like for me, like taxes, let's say, well, the person I know for sure is only going to come once a year to get their taxes done. And the average customer lifetime, well, I know that the person will stick with their CPA for the next 3 years for sure. So that's how we do this. And again, it's a combining the information that we can find from our financials, again, with the information that we may find in our CRM. And if we're a professional services provider, we may be able to find that very easily, even from our financials, because we can count how many customers we have. So now we're going to talk. So previously it was customer KPIs, right? So it's a combination of using my CRMs plus my financial data. Now, these are the three financial KPIs that we see the most valuable for small business owners, and more the ones that are just starting out. So what are those? We have the revenue growth rate. So remember at the beginning, you want to keep consistent and organic growth. Let's say that you're being like, you want to say your goal to be specific. You say, okay, I'm going to pick 30% because it's measurable and it's realistic for me to be able to grow 30% in the next year. So in here, how can I keep track of that if I'm actually growing at that rate? Well, I'm going to look at the current period revenue minus my prior period revenues, and I should be looking at these every single month. Every time, okay, my accountant tells me, hey, I'm done with your financials. Well, I'm going to go in and I'm going to find these numbers from my total revenue minus my prior month's revenue divided by my prior month revenue, and that's going to tell me how much have I increased my revenue from one month to the other. That will allow me to learn about my seasonality. Maybe I didn't even realize, but I am in a seasonal type of service provider. So that one is very important. The next one is going to be burn rate. So you may have heard more about burn rate for like more of like the startup in the tech world when they raise a lot of money and they're like, oh my God, we need to like make it last. Burn rate is still very important for other type of businesses, for professional services, for people that they may not have like a subscription, but it's like, okay, well, I don't know how next month is going to look like. I don't know if I'm going to have the same quantity of sales. Well, the burn rate is always going to be able to tell me how much money am I burning every single month. So I'm going to think about, okay, if I'm burning $10,000 per month, I know that I'm going to need to be able to have that quantity of money in the bank to be able to cover. Again, it's not saying that you're not going to have any sales, but what that says is, okay, if worse comes to worse, I have zero sales, how much operating expenses will I have to still pay? And then we have the runway is going to be my current cash balance divided by monthly burn rate. So my runway is going to tell me, okay, if everything goes to, would you please? Yes, yes, we will. So the runway says, if everything goes wrong, okay, I'm like, okay, I'm going to put myself again as an example. If I have no customers whatsoever, how long is my money gonna last me before I go bankrupt, pretty much. So it's allowing you to think when you're a startup company to think, okay, I have all these variables and I want to extend my runway. That's also why it is very important to accumulate that retained earnings, accumulate that cash in your business to be able to cover your operating expenses that are fixed. Let's say if you have employees, even if you don't have the sales there, you're going to have to cover all of those expenses. So to be able to understand, okay, what are my normal operating expenses? Well, I have employees that I need to pay and they're not hourly, let's say their salary. Well, it doesn't matter if I have no sales, I still have to cover that. I may have rent, insurance. And once you understand all of those expenses, then you understand, okay, this is how much money, no matter what, I'm gonna be burning that month. And then once you know, okay, then you want to start building up that cash to be able to cover some of those expenses. Again, once you start growing and you have your clientele and that recurrence of revenue, then you may be able to spend money on like investing in equipment, investing in other areas. But at the beginning, it's very important for us to start companies to be able to have that cash balance there while we are in the growth phase and stabilizing each other. Yeah. So this is again a recap on the financial KPIs. So we have we look through the three main type of KPIs. Again, because I'm an accountant, I am more likely to gravitate towards financials. But again, financials is not the whole picture. But here I wanted to like remind you, hey, like even in your financials that you probably already have because you all have to prepare tax returns, you can already grab some of these KPIs that may be already very beneficial for you. So some of them are not just complicated formulas. Some of them are very easy to keep track. So we have the gross profit margin, all of your net income, cash flow forecast, understanding how much money, the timing of your money, right? Because um, that really is going to tell you how is the cash situation in your business. Like in a lot of professional services, you may have a net 60, a net 90. A lot of governmental contracts are like net 90. So what does that mean for your business if you still have to pay for bills even before you get paid for the services that you have provided? Then we also have operating expense ratio. Again, thinking about the efficiency in managing overhead costs. So we were talking about like, okay, what are my direct costs? If I'm like manufacturing a product, I have my direct costs that are going directly into the product, but I also have overhead costs. And how can I become more efficient with that? And then we have accounts receivable turnover. So we were just talking about like accounts receivable, about like clients that have this net 90, net 60. It is important to track them to be able to be prepared to build my cash to cover expenses that I need to pay even before I will receive payment from my customers. Some clients decide to go to line of credits to kind of like fill in the gap, but you can start building up your own. So now that we're talking about like, okay, when you're starting out, you really want to understand all of your expenses, your monthly expenses, to be able to cover them no matter what sales look like. But once you start stabilizing your business after your first to like your second year, then you want to really focus on your revenue metrics. Okay, now that I can cover, my runway is pretty long, I can cover my expenses for a couple of months and I have recurring clients. I'm keeping all of my customers, I'm keeping track of my retention of my customers and the lifetime value of them. They're sticking around for a long time. Now I wanted to be able to focus on my revenue metrics, right? Because at the end of the day, we have like the business is like kind of like this bucket. So we have two things. We have the inputs and we have the outputs. So the input is going to be all of our revenue and then our output is going to be expenses. So we have these two things that we can control. So the main thing that we want to be able to control is going to be the revenue metrics. So making sure that we're tracking monthly recurring revenue. If you are a subscription types business, then you can track that annual recurring revenue. Then you can have the average revenue per user. And again, like these are going to be easier if you're a professional service because you're invoicing each customer and you're probably invoicing them through some sort of accounting system or some sort of software so you can run the reports and really know, okay, to customer X, I have billed $10,000. So you'll be able to know for each one of them, customer X, customer B, A, this is how much I bill them, this is the average, and you'll be able to get this average revenue per user, which in your case could be like per customer, right? So user is more related to like a software, but it could be per customer. And then we have also lifetime value. So now we already talked about our customer KPIs, we talk about the financial KPIs, and now here we're gonna have the operational KPIs. So we talked a little bit about it, the monthly recurring revenue. We always want to make sure that we keep the money coming in. Again, it's gonna be my number of customers and average revenue per customer. So how much revenue do I expect to have? So if I'm starting a store, for example, at the beginning, my monthly recurring revenue is going to be very low, but I will be able to keep increasing it as more customers keep coming every single month. Then we have another important one, and more for professional services, is going to be the conversion rate. So of all these people that are visiting my website, how many are actually becoming my clients? So in a professional service, 30% is actually a pretty good conversion rate. And this tells you other information too. So let's talk about the conversion rate. If your conversion rate is 90%, 80%, that probably is telling you that you're underpricing yourself. You always want to head for a conversion rate that feels right, and it will allow you to really assess, okay, what is my pricing strategy? If everyone is saying yes to me, then that is going to give me other signals about other areas that I may need to improve. Then I have my customer retention rate. So again, like nothing is as valuable as keeping your current retention rate up, because again, like you are going to end up spending so much more money in sales and marketing to be able to get new clients, and if they keep churning, then they will be it will be a very expensive strategy to do. So now one more questions to you guys. So what is your top priority for financial management in the next year? So in the next year, what are some of those main priorities that you have? So remember how at the beginning we talked about like, okay, this is going to be the strategic plan, and these are the KPIs that are going to help me get there and be able to measure it. So you guys can answer with the QR code, or you can type it in the chat. Don't be shy. I think that Miss Sparrows, you turn on your camera. You probably didn't meant to. Yeah. No problem. Okay, so I think I'm getting right here. I'm gonna get the answers to see what other ones, and feel free to keep putting like questions in the chat that we're gonna go answers. Just 1 second, guys. So it seems like charging. Okay, increasing revenue, reducing costs, no one. So a little bit of increasing revenue and enhancing profitability. And it also let it use well, there are some points to consider measuring. So for you, Kina, I would suggest if you have a wellness business, if you charge per subscription or do you charge? So one of the things that I will look at is your customer retention and your customer lifetime value. I'm very interested because it seems that it is like a youth group, so I don't know if it is going to be kind of like just seasonal. Is it mostly focused on the summer? Mostly consulting. Okay, so you want to focus on for consulting services that you don't really have like a subscription type base. You want to be able to track what is your fixed cost. Okay, if I have no sales, what cost do I have? Once you figure out that, then you are like, okay, and I want to increase my profitability. So expenses could be at a minimum. You're like, okay, I'm a max efficiency there. The other thing that I care is about how many new customers am I getting? So you want to see, okay, how much am I spending in sales and marketing? And how many customers am I getting? So that will be another one to keep track of. And the other one that I will highly suggest to you is the lifetime value. So how long are these customers staying around and what is the value for each one of them? And more if you're trying to grow your business. For consulting, there's usually not that many expenses. So that's why you mostly want to focus on the revenue side. 10 to 75% enhancing predictability. Yes. So yeah, I would say that, Keenan, at the same time, like looking at your profit margin, I'm guessing your profit margins are pretty good because consulting have very small expenses, but the main thing will be increasing revenue for you. So making sure that you are okay. How am I getting out there? And how many are being converted into customers? How much each customer usually turns about in a sale. So like, are we talking about like, okay, I get an average like $1,000 per customer and I'm getting this many customers. Those will be the KPIs that I would suggest for your business, for your consulting business to be able to track. And again, remember, this is a way to keep assessing what are the good strategies that you could take. So for example, like if you were trying before to do, oh, well, I was assistant to the schools and this really is helping me, then you can see, okay, now I can see that I'm signing up a lot of new customers. But if you're like, okay, I've been going to the same networking events, to the same organizations, and there's no sales, then there is something that we need to change about that. So if once you look at your KPIs and they're going to be telling you, okay, am I moving towards my goal or not moving at all? And in the example that I was giving you too, it's like sometimes it's like businesses focus on one strategy to increase sales, and they don't assess is it truly being effective and how much is it costing me to have every single client. Because let's assume that you are advertising somewhere that is costing you $3,000 and then you got two clients, but each client represented $200. So it's like you're spending $3,000 for $400. So making sure that you are assessing your current strategies, and I would say focus on the growth of the revenue. So yeah, so everyone wants to increase profitability, so that's very exciting. Now, the other portions that I want to talk to you guys about, it was leading versus lagging indicators. So we talk about how like everything is a metric, like clicks, speed. There's so many things that are just metrics, but the KPIs was those like very, very important metrics that can really tell us the the health of our business. Yes, as solopreneur, I would like to keep track of my finances, spending and earning. Yes, absolutely. So making sure, okay, what is my average spending and what's my average earning, and making sure that you also keep in your business bank account enough to cover all of your spending. So yes, you need to start tracking that, and sometimes it's kind of like out of mind, out of sight, out of mind. So making sure that you're doing this every month. And making sure that you are sharing that. If you're a solopreneur, if you have some sort of mentor or your spouse, making sure that someone else is holding you accountable and that you set goals for yourselves, and goals that are based on your historical information. So if I know that my earnings was 100,000 and my spending was 80,000, I'm not going to shoot next year to have 300,000 earning and 10,000 spending. So making sure that we look at the historical data to be the baseline to how we build our KPIs and how we build our goals within those KPIs. So for the leading and lagging indicators, indicators again can be any sort of metric, can be an indicator. So in this case, we're going to have the leading is going to be the predictive and forward looking. So it's going to give you signals. Could you get part of my slides copies? Yes, we're going to be providing. Yes, I will send it to Andy and I'm sure that they will send it up to everyone. So predictive is going to be just early signals. So there is predictive metrics, right? Like click in the website. If I know that my conversion rate was 30%, so I was like, oh, okay, it's 30%. So out of like 100 clicks, I got 30 clients. Well, if now I am seeing that my clicks, which is just a metric, it's not a KPI, it's just a metric, has been reduced to 10, and I know that my conversion rate is 30%, that is going to mean that I'm only going to have 3 new customers, which at the moment is going to be just a leading indicator, right? Because my clicks in my website is going down, which means that in the future, I'm going to see less revenue. So leading indicators are metrics that are going to tell us what is going to happen in the future. So like the number of clicks, right? Lagging on the other side is going to be my revenue. Once I'm done with my financials, if I'm doing it myself or my accountant is done with the financials, they're going to tell me like, hey, Victoria, like your revenue was down by 50%. Well, in that case, it's like, well, it's lagging. It already happened. There's nothing else that I can do. But if I'm tracking my leading indicators, like the website traffic, like phone calls to my business, then I will be able to tell, oh no, I'm going to have to do something because my revenue is going to be lower because I'm seeing less traction of people being interested in the business. So again, that's the difference between leading and lagging indicators. They're both really important. We also need to track the lagging, even though it already happened. We need to be able to assess the results of how we did. But the leading, it can give us that competitive edge on, okay, I know this is happening, so that would probably mean that this tax season is, for example, like for me that I'm an accountant, this tax season is not going to be as busy because I'm already can see that this time of the year is supposed to be when people are thinking about taxes, right? So remember leading and lagging and combining both of them, not only focusing on one side, but focusing on both of them. So in here we have a couple leading indicator example. Again, like the sales pipeline growth. If you have a CRM, the volume of how many people are like filling out your contact form, the clicks in your website, customer satisfaction score, the leading indicator. Why? Because that's going to tell me, okay, if they're satisfied, I know they're going to stay longer with the company. Website traffic, same thing, increased signals growing interest. Employee training hours is also a leading indicator. Now, we have some examples of lagging. Again, profit margins. Well, that already happened. I already saw what were my expenses, what was my revenue, customer retention rate. Well, the leading indicator was, well, how happy are they? I need to make sure I keep sending like surveys saying like, okay, like rate us 1 to 5. Be able to track that because that's going to be a leading indicator for my customer retention rate, which is going to be a lagging indicator. Then I have my monthly sales revenue, and then I have my employee turnover rate. So these are the difference between the leading and the lagging. Both combined can be a very powerful tool for you to use to assess, okay, what's going on in my business? I need to sit down, evaluate my leading, my lagging. Again, remember to only focus on few metrics. If you need to search for more to get the full picture, then that's when you do so. That's when you go and dig for more information. But focus on 3 KPIs per each operational, customer, and financial. And focus on those 3 KPIs only and keep looking at them and familiarizing yourself, getting in the habit to track them, because only like that you will be able to keep making sure that you move forward your strategic goal, which in my case, in the example, right, was to open a second location. So what does that mean? I need to bring this big idea into actionable items for every single day for me to be able to track monthly, if possible, even more than that. So okay, Victoria, I have picked my 3 KPIs for each operational, customer, and financial. Now what? Well, that's what is called a KPI dashboard. So if you have an accountable partner, again, like they said, like if you have a small team, you can also share some of the KPIs with them too to hold them accountable. It really, I read in a magazine that increased 15% employee um, retention if you share like that. You can see and take ownership over the performance of the business. So what we want to build is a KPI dashboard. There are several softwares out there that can help you do that, but you're going to have to enter the data because of how we were saying that, like, well, there's CRMs for like the customer area, and there is also the accounting area from like QBO. So making sure that you can use something that is easy to use for you, that is not such a big learning curve, because you don't want to like buy this very expensive software to be able to track them. So I would say if you're just starting out, start with Excel. Bring your information. Okay, I am done with my QuickBooks for this month. I'm gonna bring my information regarding, okay, what was my sales and marketing expense? And I'm gonna see from my CRM how many new customers I got. I'm gonna divide that. I'm gonna see how am I doing compared to. There is also a benchmark, guys. If you are like, okay, I'm getting this percentage, Victoria, but I don't really know, is this good? Is this bad? I don't really know if like my percentages are good. There are benchmarks for every single type of industry. And if you have like access to a public library, they have databases in there where you can get benchmark information depending on your industry. So the information is out there. Again, like I'm sure that your closest librarian person will be able to help you get access to those databases that are included if you have access to a public library. Because I also get that question quite a bit about like, okay, Victoria, I'm tracking them and seeing them, but what does that mean? Like I'm doing good compared to other businesses? Are my margins where they're supposed to be for my type of entity, for my type of services? So again, there is a lot of recommendation to even track KPIs daily. Like if I know that I want to make $300,000 sales at the end of the year, what does that mean in a month? What does that mean every day? You can always track it daily and weekly and monthly. I mean, it requires more consistency, but the more you do it, it's always going to be able to be better for you and your business, and it will give you more control over the destiny of your business and being able to achieve all of your strategic plans. So yeah, so now we can start working on all the questions that was at the presentation.
Thank you so much for that, Victoria. And we'll
Yes.
give it a few moments here as people type out their
Yes.
questions, or feel free to go ahead and use the raise hand icon within Zoom to go ahead and come off mute and ask Victoria questions. As those questions are coming in, Victoria, here
Yes.
at DreamBank, we are a community that is built up of fellow fearless dreamers. And we always like to ask our presenters, what's one piece of advice you have for someone who's actively pursuing a dream?
To jump into the unknown. It's very scary, but you just have to do it. I think the biggest fear I think that someone may have is never achieving their full potential.
Mm,
So never be afraid of trying to achieve your full potential. Yes.
love that. I love that. Um, Question came in from Drew. Do you have any
Yes.
recommendations for Google Sheets worksheet templates that are built for tracking KPIs? Any recommendations,
Yes.
Drew?
So I don't have a specific recommendation, but there are a lot of resources out there that will give you already a template. And yes, I have seen plenty of them that are like free download, and they're very, very good. And again, like to get started, it's always like good to start instead of like a blank Canva to start with something. So yes, I highly recommend those. Just make sure that you like you personalize it to your business, because again, like KPIs and everything is very personalized to what you do and what your strategic goal is.
Wonderful. Some nice praise coming in from Annette. Thank you, Victoria. Great teaching, and I agree. Lots of really, really good tidbits and insights from this event here. And as
Thank
as
you.
a reminder, this event is recorded and will be shared out once I go ahead and get that uploaded to YouTube. And then you all will also be receiving a brief survey that would very much appreciate you taking the time to fill out. That really does a great job kind of helping dictate what types of events that we offer at DreamBank, such as ones like we had today. So with that being said, oh, here we go. Shayla was able to go ahead and pop in the chat there. So KPI cheat sheet created by Novii CPA that Victoria covered during the session with the equations that we went over. So go ahead and follow that link I'll give it a few moments here in case anyone was needing that as well. Some more great praise that came in from Karen. Thank you for your time and knowledge, Victoria. Well done. And again, I can't echo that sentiment enough. With that being said, we will go ahead and cap it there, and we will see you all next time. Take care.
Thank you very much.